You know 90% of traders fail in the market, right? They lose money. Well, there are 5 main reasons why that happens. And these are all things that I had to suffer through when I started too. So the first reason traders fail is because they don't have a proven trading edge. So an edge is just that thing that's gonna actually help you do better than average. An edge is basically telling you what pocket of the market you're exploiting, because markets are pretty efficient, right? So you can't make money unless you do find some inefficiency. And how do you do this? Well, there are just so many different ways, because there's a million ways to make money in the market, and it's all very personalized. So you got to find the way that actually works with your personality, and you got to find the edge that you can actually exploit. And it gets really tough to know what works and what doesn't. So even take like value investing. It works, right? For sure value investing works. But how are you actually doing that value investing? Like, there's a lot of different ways to do it, and it comes down to the skill of each practitioner. For example, Warren Buffett is value investing, but he's doing it a lot better than you or me. And then the issue is most traders, they're discretionary. And if you're discretionary, you don't really know if something is going to work over the long term because you haven't really back tested it. There's no way. There's no good way to really do that. And I'm talking about if you're discretionary and have an actual strategy though. But most people are just buying and selling, have no plan at all. So of course you're not going to have an edge and you're not going to win long term. The second reason that most traders fail is because the methods that they're using cost way too much time and effort. And it just takes a ton of experience. So you can take my value investing example again. Buffett spends 12 plus hours a day going through financial statements. Is that something that you're willing to do? And that's not to mention all the accounting expertise you need. You need to understand specific industries, because when you're analyzing companies, a lot of it comes down to industry, and every industry you have to analyze differently. Like, you can't analyze a utility the same way you analyze a tech stock, because this tech stock is going to be losing a ton of money each quarter while the utility has like steady profits and dividends. They're just two completely different things. But say you're not doing fundamental analysis, maybe you're doing technical analysis, which sounds easier, right? But no, regardless of what the internet says about using this indicator and this flashy sign that's going to tell you when to buy and sell, it doesn't exactly work out like that, because chart reading pretty much becomes an art in itself. A lot of it comes down to interpretation. So once again, you need all those years of experience to make technical analysis even work. But okay, say you do manage to find a strategy with a decent edge. Now the next problem that happens, or the third problem in this list, is that it just becomes tough to execute, emotionally tough. And you guys know I talk about trading psychology all the time because the market is just so good at bringing out your worst emotions. Fear, anxiety, doubt, uncertainty, all of that. There's something about seeing your money in the market going up and down, your life savings. It just drives you a little crazy, which is why most investors are buying at the worst time and selling at the worst time, because even though their strategy might have that edge, they aren't using it because their emotions are taken over. And then it screws up whatever statistical edge they had, and it sucks, because once you have the strategy, actually succeeding comes down to following that strategy day in and day out. The fourth issue that many traders have is position sizing. And position sizing is not an easy problem. This is something that a lot of hedge fund managers struggle with too. Like, you guys know I got that show with Real Vision, right? And on Real Vision, they interview all the greatest hedge fund legends. Well, in a lot of those interviews, they ask about position sizing. How do you do it? Do you have any recommendations? Because it's, one of the toughest problems. And a lot of these managers, they don't have a good answer because they kind of go by feel. They're not really sure what's optimal. And everyone kind of has their own way of doing it. And everyone, regardless of whether they're beginners or pros, hits that same problem where you feel like your positions where you have the least amount of money in, they take off. Then the ones that you have more money in, those are the ones that are tanking. So overall, you end up losing because your position sizes are all wrong. And that's tough to know how to fix. That was a huge problem I had when I was a discretionary trader. And the fifth issue that causes traders to lose is that they don't have the proper risk control. Because this is what I try to explain people. I tell them you could have a super simple strategy that basically does what the market does. And I mean, you could literally just buy an ETF. And if you can put in risk control that helps you sidestep market crashes like in 2008 and 2000, just that alone, if you're out of the market during those times, you're in the rest, you are going to destroy everyone else. Because the biggest problem is that strategies, or the lack of strategy, they don't cut off those tail end events. And those tail end events, like market crashes, they only happen once in a while, right? But when they do happen, they cut your capital down by 50% or more. And it is so difficult to recover, because if your account gets cut by 50%, how much percentage does it take to get back to even? It takes 100%. You gotta double your account. It sucks. But if you have the right risk control in place, you will avoid those huge crashes. And that, over the long term, completely transforms transforms your returns because it puts your compounding on a whole different level. So these problems that I'm talking about, a majority of traders have faced them. And then the ones that succeed are the ones that go past them. It was the same issues I had to deal with. So for me, the way I got around all these problems and fixed them was from moving from a discretionary trader to becoming a systems trader. So what was our first problem? Our first problem was that most traders don't have a strategy with a good statistical edge. And most traders don't know if they even have that edge because there's no way to really test it, especially over the long term. So the beautiful part about a system is that you can actually back test your edge because your system is just a set of rules, right? So you can apply those set of rules to a set of data and you can see how it works out. It's all mathematical. So you can check your probabilities and see if you have that probabilistic edge. Now, in my case, the system that I use is called the NASDAQ All-Stars, which you probably already know that because I talk about it all the time. But the statistical edge that it's using is momentum. And the concept of momentum completely disproves the efficient market hypothesis, if you're familiar with that. And basically, momentum is just a universal cosmic law that you see everywhere. You see basketball teams go on hot streaks, right? The same kind of thing happens in markets with stocks that just start trending and they don't stop. And there are so many white papers that prove that momentum works in the markets, going all the way back to the 1920s. You can even go farther back if you have the data and you'll see that it always works and it'll always continue to work as long as markets are run by humans. But that's a different discussion. And that back testing though is what gives you that confidence in that edge. The second problem was that a lot of trading methods take way too much time and experience to execute. But thankfully, with a system like the All-Stars, it takes very little time to execute. Because once you do all the back testing analysis to build the system itself, then you just let it run. Your only job after that point is to actually execute on the trades. And for me, with the All-Stars momentum strategy, that takes a few minutes a month, literally. I barely have to check the market. And that's nice because I got a lot of other shit to do than staring at the market all day. Now, like I said, your job comes down to execution, right? Which brings us to the third problem of why traders lose, that trading is emotionally tough. But the nice thing about having the back-tested system is that you see its full cycle. You know how it's generally going to perform over the long term. I mean, you're never going to know what the next trade is going to be, whether you're going to win or lose. That's impossible. But again, we were talking about statistical probabilities, right? So if you take the expected value of all that data and you see it's positive, well, that means you got an edge. And I feel like I'm using a lot of buzzwords right now, but basically what I'm saying is that you get more winners than losers when you look at the back-tested data and you see that you come out profitable. But when you can actually see all that data, it takes away a lot of the uncertainty, at least over the long term. And that really helps you manage your emotions. So you know, even if you're in a drawdown, you had a string of losses, you know, all you got to do is keep putting on that next trade that the system tells you to, because eventually you'll be out of that drawdown. And by taking those trades, you're going to make that money in the long term. So that knowledge and that vision from the back testing helps, you know, manage your emotions so you can actually execute. And also the fact that you don't have to analyze the market while you're trading, because you know, with the system, all that analyzing you did was done before you even entered the market. That really helps too, because it gets intense when your money is on the line and you're trying to figure out what decision to make. I don't like that. I like all my decisions made beforehand, including decisions about position sizing, which is the fourth main problem that traders have. Because with the All-Star system, we just put 20% in each position and we're only holding 5 positions. And how do we know that works? Because once again, we back tested it. So again, that's less decision making too in the heat of the moment. We don't got to decide when a stock is taking off how much money to put in it. We already know. We already know what has the best probability of working out. And for us, we made it really simple, 20% in each stock. And having a system also helps you with that last mistake that traders make that make them lose, a lack of risk control. Because with the All-Stars, we have all our stops and targets already in place. So we know exactly what we're going to do with the stock when it reaches a certain price level. So like with the All-Stars, what happens is that we measure the momentum of each stock in the NASDAQ 100. And then we get a list like this. And all we're doing is rotating into the top 5 in that list so that our money is with the stocks that are moving and out of the stocks that aren't moving. That way we keep making money. But do you know what happens when the market turns? You see these TSI numbers that I was talking about that measures the momentum? They all turn red. They all turn negative. And when that happens, guess what? We're out of the market. And during those times is when things get really rough. So look at here, 2008, right? When the market crash happened. The Qs or the NASDAQ were down 31%, but our system was only down 7%. So it's not perfect. I mean, you aren't somehow making money when the market is all tanking, but it's cutting off that tail end like I was talking about. So the largest drawdown in the All-Star system was around 22%, where the largest drawdown in the NASDAQ total total was like 55%. So that drawdown is half of what the index has. You're cutting off that tail risk. And when you cut off that tail risk, that's how you get an equity curve that looks like this blue line right here, compared to this red line, which is the NASDAQ. And every time you avoid a big market crash, these lines separate a lot. And over time, you see it's just separating more and more and more. And that's because with the system, you're constantly controlling risk. Where if you say you're a buy and hold investor, there's no risk control. So by this point right now, the Qs are up 349% since I think 2008 this goes back to. The All-Stars though are up almost 1200%. Huge difference. And that's what you can get when you're managing risk. Now I keep talking about the All-Stars because we have open access to it right now. Today is actually the last day. So tonight at midnight Eastern time, we're gonna close it down. And the next time we open it, it's gonna be next quarter, at least 3 months. So if you wanna learn more about the All-Stars, check out this video I put together. I'll link to it up above and down below in the description and comments. That video will tell you more about it, it'll explain it more. And then on that video, you'll see a link where you can actually sign up. And I keep talking about the All-Stars because I wanna help you guys out with a shortcut if I can. Because yeah, like I explained, using a system is great. It's amazing. It really made my trading easier. But actually building a system, that's not easy at all. I teamed up with experts who have been doing it for almost 40 years, building systems. That's how we put together the All-Stars and made it so simple and effective. But it takes a lot of experience and time and effort, and years literally, to build great systems like this one that averages over 30% a year in returns. So I offer this system as a shortcut if you're interested in taking it, because then once you have the system, all you got to worry about is execution, which still comes down to you. But this is the most help I can provide. So again, if you're interested, check out that video that I linked to. Go learn more about it because you don't want to be in something you don't know about. And then you'll have the link to sign up. And remember, it ends tonight, midnight. And then the next time we open it, prices are actually going to be 50% higher. So if you want to take advantage now, start learning how to use the system, start making your life easier already, then go ahead, check that out. And if you haven't already, make sure you subscribe to this channel and hit that notification bell so you get an email notification every time we publish new videos, which is almost every single day, all about markets and business. So subscribe and I will see you in the next video. Stay fallible out there. Bye.